Well, we're back, ladies and gentlemen, and the madness is about to unfold. Liberation Day is round the corner, and Mr. Donald Trump is making sure that the world knows about it. In my opinion, Trump is about to screw the world with these tariffs, and he doesn't even care. He even said that he doesn't care if car prices actually go up. But, you know, the thing with medicine, right? It's sour in the first second you take it, but it's good for you in the end. And I think this is exactly what Trump's mentality is. Problem is, guys, the stock market is starting to behave a little bit erratically. You've really got today and tomorrow before the actual tariffs come into play, and no one knows what the sentiment's going to be. Now, we can assume that everything's going down right now and investors are all running towards safe havens. And we're going to be diving into those assets so that you are aware that when you do come to start buying any assets, take into consideration where do investors put the money when they are concerned about things. So I'm going to be diving into that. We've seen a little bit of flavor in cryptocurrency right now, moving away from the day's lows. So we're going to dive into that and wonder exactly what can we expect from the rest of the session. I mean, is Trump going to be talking today? Probably. I mean, this tariff story is the center stage of it all. But if you recall the last video we did, we got to pay close attention to that Japanese yen, man, because their inflation came in a little bit higher than they expected. So if you are new, welcome back to the lives, guys. We're going to go back to the routine of doing the lives. I'm going to be doing some videos as well this week. I aim to do a video in the evening just to give you guys a breakdown of what's been going on and any news that could be coming out that I believe you might need to know. So, without further ado, let's get into this program, ladies and gentlemen, and break it all down and understand what's going on. Here we go. So, yeah, tariffs. They are the sour sauce for the marketplace. Going into the article, they do talk about the fact that lots of investors are running into safe havens. This is important if you're trying to work out what the sentiment may be across the board. Now, when we go into it, it says here, it's all about tariff uncertainty, according to Jeffrey strategist Mohit Kumar. It says the negative scenario for the market would be that April 2nd just marks the starting point of negotiation, which is what these tariffs are. As I said earlier on this morning, Trump's going to get these tariffs out, and then all of a sudden, Mexico might give him a call and say, yo, listen, we want to negotiate right now because we know you're going in with these tariffs. What's your best price? What have you? Canada might do the same. I mean, Canada's being pretty brutal. I just bring your attention to what's going on over there. Look at this. Canada just banned Tesla from their electrical vehicle rebate program and has frozen $30 million in pending payments to Tesla. Just quickly going over to Tesla share price, just to understand where we are with that. I mean, Tesla's been doing pretty well, but it's gapping down at the open, maybe on this news that has come out. But in even better news, sailors bought a load of Bitcoin again. Well, not Sailor, but you guys. But fundamentally, the Bitcoin has been purchased. Strategy now is the only corporate company with the most amount of Bitcoin in their holdings, around 528,000. Going over to the Arkham, 574,910. No activity in the actual ETF itself just yet, but the markets are going to be opening very soon. Taking it back to what's going on here. It says here that money managers are reducing their equity holdings and they favor bonds over and other haven assets. Well, Tino, what is a haven asset, you say? What's a safe haven? Well, let's just go and have a look at one. Here we go. So gold. Gold is at its all-time highs, and it doesn't look like it's stopping. Now, what's important about gold is this. It's not just the fact that it's a safe haven and investors go to gold. And when you start seeing gold being mentioned in the news, I mean, has anyone actually come to you and said, have you seen the price of gold? It's going up. It's going up. I'm going to go and buy myself some gold. It's the worst time to buy gold, in my frank opinion, if you're looking at going out and buying gold for the fact that it's going up and you think that your gold's going to end up being valuable in the near future. When I say near future, I'm talking like in the next month or so. People will make the mistake of thinking that if you go and buy gold now, then you might be able to sell it just for a little bit more. No. Right now, guys, is, in my opinion, the worst time to buy gold from an investment point of view. Why? Because they are already hedging the event that is due to come. What do I mean by that? Well, remember, hedge fund managers take advantage of discount prices on gold. So look, all of this here is hedge fund manager behavior. Okay, they are hedging themselves for the next event. And what's the next event that we've got? Tariffs. So with that being said, looking at gold's price, you can see it's 3,117. That is a safe haven. Another safe haven is the Japanese yen. That's starting to pull back ever so slightly. Of course, with last week's data about the CPI in Japan has got investors thinking that maybe Japan could be increasing their interest rates. Zooming out, you can see that Japan is coming away, well, the Japanese yen is coming away from a big moving average right here, which appears to look like support, but I believe that the sentiment with the Japanese yen is it's going to start marking higher. Now, with that being said, you've got the 10-year futures markets. This is not good, guys. If the 10-year futures market is going up, that naturally means that the stock market is going to experience a little bit of pain. What you're really looking for between these two assets is 10-year futures going up and the stock market going up. And if you're not seeing that relationship, it means that investors are starting to look for safer asset classes, okay? And that means we go over to the bonds market and you can see that thing already is going up. This is the 10-year bonds, US bonds. They're getting in right now, but more importantly, what's been going on is the fact that Goldman Sachs has said that they're pricing in the idea of 3 rate cuts going into this year. That explains why gold is moving up, because gold will do the inverse of what dollar is doing. If investors see that the interest rates in the US are coming down, they're naturally going to get rid of their dollars and go into assets where they can actually generate a yield from, even though gold is a zero yielding asset. But just to put it into perspective for you, here it is. The bets right now, in 37 days' time, the Federal Reserve will meet up. And bets are coming in that they're expecting, now it's at 20%, that the Fed is going to be cutting the rates. And they're betting that it's going to be between 4 and 4.25%. But they are more heavily weighted to the 4.25 and the 4.5% region. What's going to cause this to fluctuate? Well, it's going to be the calendar, ladies and gents. We've had the manufacturing data from China, and it's showing that it is expanding. They went from 50.4 and it's now up to 50.5. Any reading above 50 is expansion in the economy. So the manufacturing sector is doing all right. And remember, when China's doing business, so is oil. And oil has been climbing up. And when oil climbs up, it's because China is one of the largest consumers of US oil. So when you see China doing all right, oil's price will do all right, and that thing will just keep on going up as well. So just take that into consideration when you are trading oil. But remember, if oil goes up and the stock market goes down, that too is another haven for investors. Now, let's just get into the nit-grit of it all and understand what is going on with Bitcoin. Good old price action of Bitcoin. So we spoke about this earlier on, about strategy picking up 22,000 Bitcoin. We've now also got this story here. So guys, just be careful. Coinbase users have been hit with another 46 million in suspected phishing scams. Again, I don't know how Coinbase is doing it because I only hear about scams happening to Coinbase. So if you are with Coinbase, just be very careful. If anyone contacts you and says you need to do something about your crypto, don't, just ignore it. Just go and look into your balance and see if it's still there. If it's still there, fine. But then contact Coinbase yourself. Now, what's going on, Sailor? What's he doing? You guys saw this, didn't you? Where strategy's been moving Bitcoin. And now, of course, we've got this story here that he's purchased another 1.9 billion. That's great news for Bitcoin. So let's just go into the order flow for a second on Bitcoin and understand what we've got. So in the past hour, 2,124 traders were liquidated. That's a lie because it was actually 14,000 a couple of hours ago. So looking at the flow, what have we got? Those bids have come back again. It was pretty empty earlier on last week, but now they're starting to pile up again. Listen to this. So we've got a couple of orders and they are quite recent as well. If I just draw your attention to this zone right here, can you see this area here without this stupid box interfering? All right. Let me just get this and mark it off for you. Right. Look at this. Can you see up to this blue line here? Focus on this blue line, right? The blue line shows you where roughly these green bars are coming into play, okay? And you see how it's dark and then it's got the green bars, right? What is that telling you? It's telling you that these are recent orders, okay? Look at this one here. It's been in the book for around 94 days. The poor dude has just left his $22 million order right there, waiting for Bitcoin to sit at the 56,700. Okay. Most of these guys right here haven't been in long. Got this order here that was there for 6 days. Got another order here that was there for 3 days. We just had another little order right here for 6 million at 11 hours ago. And the problem that I've got is you are seeing quite a significant amount of bids that are coming into the market. These are people that are prepared to buy. Where are my offers? You've got quite a decent cluster of offers here, right? And you've got some more bids that are coming in here, 4 million at 82,000. And then you've got this little bid right here for 1 million. Over the weekend, you can see that they have been picking up quite a bit of Bitcoin, to say the least. However, if the marketplace is in that wait and see mode and there is fear about this tariff story, then any moves to the upside would encourage investors to sell the rallies. Let me explain. Let's just take it to the idea of the VWAP. As I was talking about this not so long ago, if you have a hedge fund manager and his goal is to sell your stock, what are you going to do with the fact that if he starts selling it as prices go down? You're not going to like that. You're going to like it if he sells it as a rally comes into play. So this is the VWAP. And the logic says that if they're trading lower, that means they're going to go back to the VWAP and sell from the highest point. Sell from the highest point, sell from the highest point, and you get the picture. You don't want to be selling here. That's a stupid place to be selling. All right? That's a stupid place to be selling. And that's even worse. Just quit trading. You're selling down at these lows. Okay? Selling the rallies. And that's what's going on. So any move that you see to the upside that's happening right now, that could effectively be hedge fund managers being able to capitalize on selling at the highest possible price. Now, going into the stock market, you can see that we've still got 0 exposure to 20% exposure. So it doesn't mean that you can't have risk on, but only commit a certain amount of your portfolio to the sentiment of what's going on in the stock market. Let's quickly reevaluate where we are with the NASDAQ in terms of volume. So I was speaking about this last week. We need to see accumulation days occurring on the NASDAQ to suggest that they are going to start marking prices higher. As you can see right now, the market isn't fully opened. And over the last 3 trading days, we have had 1-2 days where volume is above the 50-day average. And that is distribution. So institutional investors are selling stock. And that's not good, especially given that they've broken down key moving averages. Okay. Now, what you've got to take into consideration is where is the NASDAQ in relation to all of this? Well, you can see NASDAQ right now is currently testing a very interesting range. You've got a blue vector candle zone right there. And quite frankly, they have swept the Asian session low. But if the 10-year futures market still maintain their movement to the upside and the bonds market keeps on climbing higher, then it's a good chance that investors are trying to lock in yield from the 2-year and the 10-year. As you can see here, they're going to try and lock in yield because there is an expectation that they're going to be cutting interest rates in the future anyway. So they're going to want to get those yields locked in. But if we do see the yields moving up and investors don't even go into the bonds, we've got a problem. Stock market is subject to these yields going up. That means investors will be going into cash. And if the dollar maintains itself to the upside, then we're going to have a bit of a problem with assets across the board paired against the US dollar. Okay? So take that into consideration when you are looking to invest in anything other than the dollar. Just pay attention to where it is in relation to the asset that you are trading. Okay? Now, quickly, I just want to dive into something here with the tariffs. So, Trump, Liberation Day, trade war, or another climb down. So, these tariffs are a negotiating tool. But all I'm saying to you is just be very careful when you are trading this week. This is great news for crypto. This is great news for crypto right here. This is even better news. There's a hidden sign of emerging Bitcoin strength. Happy days. We go into the Bitcoin miners position index. Oh, come on, man. What is this doing here? Let's just quickly log into that. And we can see if miners have been actually selling the Bitcoin. If they are selling Bitcoin, it's probably just to raise some liquidity to continue on with their mining. But what we're seeing here down at the lows right there, you can see that we did see a lot of selling happening at the highs of that price point. So if we, well, actually, no. They started to sell at 84,374, which is not a good thing. We don't really want to see the miners selling Bitcoin as it's going down, because that tells us that they're desperate for cash. So we don't really want to be seeing that. We want to see it as it's hitting highs like this up here. You You can see that when there you go, 101,000, most miners were starting to sell their Bitcoin, okay? Now, let's just quickly go over to a very important metric, which a lot of people do talk about, but they kind of, in my opinion, read it the wrong way. So in front of you, you've got the Coinbase Premium Index, which tells you about investors who are looking to buy and sell Bitcoin through Coinbase. In other words, your retail traders, all right? To simplify this chart, when it's negative, that's when you want to start buying. When it's positive, green, that's when you want to start selling. Because if you go back and look at the history of when it's in the green, yes, you've got this area here where prices are climbing up, climbing up. This is where investors are getting caught out buying these rallies to the upside. And then it starts to cut down and turn negative. They're holding on to it, and then they end up paying the price. You buy as it drops, okay? You buy when it's red. You sell when it's green. But this chart tells you to buy when it's green and sell when it's red. Nah, you don't want to be doing that, ladies and gentlemen. Quickly looking at the liquidations for Bitcoin. You can see here that we've got this big cluster of long liquidations at the 80,000 zone. And that's a bit of a problem for me. So when the stock market does actually open up very shortly, you can see NASDAQ starting to go down and Bitcoin's made that little stop run up and it's starting to disrespect that. It's swept the Asian session range. I mean, we can have a look at Solana. She's doing pretty much staying flat, but there is, of course, speculation that Solana is going to have the ETF from Franklin Templeton. They're going to be doing it. These guys down here, where are they? Franklin Templeton, yeah, he wants to get the ETF signed for Solana. That probably explains why Solana's trading sideways and doing a very good job of trading sideways. But I do believe that as we go into the tariff story, and we have got, just to put it into perspective, today is the close of the monthly candle. And here is the monthly candle on Bitcoin. Now, listen, I'm going to say it to you like this. Out of all the vectors, okay, we've only had 2 real vector candles that have appeared in this move to the upside with Bitcoin, okay? We still have this area here that hasn't been recovered in terms of the vector candle, okay? So that is a zone between 70,322 and 76,625. Now I'm going to give you something here which I think could be a possible scenario, which is going to factor in the tariffs. And just bear with me when I present this information. I did it this morning for the Platinum members. Well, actually last night in the Market Watch. And I'm going to dive into it right now for you guys to help you understand why we could be going into a big sell event, which will be the best time, in my opinion, to start buying Bitcoin. Okay? Don't worry about Saylor. Okay? Don't worry about this guy. He's always going to be buying, whether the market's up or down. It's biased. Okay, now 1 billion Bitcoin, 1.9 billion Bitcoin is not really going to move the markets that massively. It really isn't. You know why? Because look, you've got all these liquidation points, 225, 198, 138 million, 90 million. It's all over the place. And what we've got to pay attention to is, without complicating what I'm going to say to you all, when you witness Bitcoin moving up to specific points. Okay, so let's just look at options for a second. When you see lots of premium calls coming into play or puts coming into play, whenever you see those coming into action, market maker is going to do the opposite to those positions so that he can maintain delta neutral. That's the goal, to alleviate risk. Do I think 1.9 billion is a lot to move Bitcoin? It can move it just a little bit, but it's not enough, because that's going to naturally trigger people to want to sell the Bitcoin after such a big surge, because the sentiment across the board is not really looking that good. Okay, so let me explain to you what I'm talking about right now. The NASDAQ, I mean, look at that for a monthly candle close. It's completely wiped out. 1, 2, 3, 4, nearly 5 months worth of gains in the NASDAQ. Now, this is what my logic is about a potential market crash. Let me just draw your attention to something. So this is just playing around with figures, okay? From the low of here to this high right here, this is deemed as economic expansion, okay? It was an increase of 150% in prices of assets, okay? That was March 20, so the top end right there, November 2022, before the market corrected. From that correction, the market actually dropped down 38%, and that takes us to a value, right? Well, not from that point. No, I've done that wrong. Let me start again. It wasn't 38%. It can't be 60%. Have I done it wrong? I have, haven't I? Take the high. There you go. I was right. Don't know what happened there. Anyway. So a correction of 38%-ish, 37.5. All right. So that was the next correction. And then from that point, when it started to move back up again, little W formation, the market then went on to expand to the upside and make another expansion move. And it cleared 111%. Okay. That is also economic expansion. So that's another 2 years. So November 2022, all the way to the top side, 2024, going into 25 before it then corrected. Okay. Now, here is my logic. If this is the start of a bear market, right? The NASDAQ up until now has violated, near enough taken the last low from this high. That would mean that's 14%. If it goes into a 20 percentile corrective move, we're deemed as in a bearish market, okay? And that means assets have depreciated by 20% there or thereabouts, all right? Stocks are already overvalued to the sum of around 35 to 40%, some even 50. That explains why Warren Buffett has been buying Japanese stocks, because they're getting smacked left, right, and center, okay? So if we've had an economic expansion over here to the sum of around 150% and it corrects 38%, then an expansion over here from this low to a claiming only 111% expansion, and we've been economically expanding for 2 years, all right? The idea is that if the NASDAQ is going to repeat history, then the logic says that if we just assume a 40% correction, that would then put the NASDAQ towards this price point right here at around $13,000 for the NASDAQ, 14,000. Okay. Would that be a valid correction? Well, yeah, when you think about it, you've got a drop, you've got a retrace, you got a drop, a retrace, and then accumulation like no tomorrow. Start the next economic expansion. This would factor in the interest rates. This would factor in the tariff stories. This will factor in any wars that are going to be ending and any new wars that are going to be starting. It's just human nature. That's exactly what the logic is right now. Do I believe it's going to be the case? Well, stock bond ratio says that stocks are overvalued in comparison to the bonds. That is evident because the stocks are going down and the bonds are going up now. Okay. But this is over a big time frame. All right. I'm not saying this now and then the NASDAQ's going to drop all the way down to 14,000 in 3 days. And if it does drop to 14,000 in 3 days, well, it can't really drop down that much in 3 days, because after 7% correction, if the NASDAQ today was to drop from this point and drop 7%, the stock market would, well, not just the NASDAQ, but the Dow Jones would stop trading. They would lock off the markets. No one would be able to trade because it's their way of controlling the chaos. Okay. So that's my logic with what I think's going on right now. And it is all fitting, because if there is any, let's look at it like this. How many of you believe that right now it is a bullish time to start buying assets? I really want to know if you guys think now is a good time to start buying assets. I want to know what's going on, ladies and gentlemen. Tino, I have a lot of tech stock. Should I sell now or is it too late? I should hold. Thank you. Listen, it's not about whether you should sell or not, okay? But fundamentally, what you've got to pay attention to is, can you absorb the possibility that the yields are going to shoot up? Remember, you've got an event coming into play, which is the tariffs. Let's just quickly go over to the volatility index. The volatility index is spiking up. Look at it. It's gapping up. You don't really see the VIX gapping up. And that's a bit of a problem, okay? They're starting to gap up. The volatility index, in my opinion, is going to end up at 30. It will go to 30 because investors need to hedge themselves at the possibility of events that could be coming into play. Tariffs, trade wars. What was it? $180,000, what was it? $180,000 Porsche, okay, is now being sold based on these tariffs, going to go for $225,000. Ain't no one going to be paying that. And the people that do pay it either want the Porsche or it's a specific model that they are happy to pay it for. But the fact that car makers are going to get screwed with these tariffs, Trump is fully aware that this is going to be the case. And it's their way of clawing back and getting their debt back. Is it because he wants to reduce the actual debt? Is that his concern? Because we could be having a different story, ladies and gentlemen. We could be having the conversation that the US debt is close to default. And Trump is not going to allow that to happen under his name. They're not going to allow the US credit rating, the credit worthy of the US, to be downgraded again. The last time that happened, they didn't like it, and they even contacted Standard & Poor and Fitch Ratings and said, can you just please change it back, because we're going to lose interest from foreign investors. If the US loses its credit rating again, Japan are going to be like, screw these guys, man. We're just going to get all our money and scare everyone and increase the interest rates to force them to come and buy the Japanese yen. And we'll get all the money from people that should be buying US dollars, and they'll be going into the Japanese yen. Happy days, the yen goes up. Your carry trade unwind, stock market smacks to the downside, and the NASDAQ says nope and ends up at 13,000. And we just pretty much back to normal. Come on, man. It can't keep going up forever. If you want me to keep telling you good news, I will tell you good news. You know, they bought Bitcoin, happy days. But looking at the chart of Bitcoin, does it look like that the bottom is in? That's the next question. Is the bottom in? You know? Here we go. Tino, phrase, pig in poker, refers to a situation where someone buys a piglet stuffed in a sack or a poke without being able to see. Huh? I don't understand that. Sorry. You mean poker? Pig in a poke. I don't know that saying. Majority of folks are going to be hit hard by these tariffs. They just don't realize it yet because prices haven't hit the shelf yet. They haven't. And the consumer is going to absorb that. If you go back in and look at the articles on the data that's been coming out from last week, it showed that people are concerned and the expectations of inflation is they think it's going to go up, which is why the Federal Reserve, I'm going to say it now, Jerome Powell, J. Powell, the gang, man, I miss this guy. I want to hear Powell speak so much. Trump just talks too much, man. But anyways, if the US economy starts to contract, that's when they will cut the rates. But if it can absorb the high interest rates, then they're going to sit on the sidelines and wait to see how it manages inflation. We've had one good reading on inflation. That is it. Does that grant the idea that we now cut the rates? That's what Powell said. And he said, no, we're not going to cut the rates just because of one reading. We need more. We need more data. This week, guys, we do have an interesting week as well. We've got non-farm payrolls. So it's all going to be this week. We're all going to know about where we are with the interest rates, but just throw in the tariffs into that as well. And this is going to, and I'll tell you what they're going to say as well. Even though Jerome Powell said that they don't think that the tariffs are going to have an impact, I guarantee they're going to turn around and say that maybe the tariffs will have an impact, which is going to make us believe that we're not going to cut the rates and we're going to hold and we're going to wait and see. That's the FOMC you're going to get in 37 days' time, in my honest opinion. We are not in the bottom yet. We're pretty close. Ha. We're not there yet. Are we there yet? Tino, when mega dump. Altcoin season historically starts this week. With the Solana ETF, ETH forming 4-hour W and Bitcoin dominance weekly is at the top, forming M. If the tariffs aren't as bad as they say, we expect we'll have a buy the news event. So I'm expecting the dominance to get up to my level. Look, it's getting close. I'm telling you, it's getting up there. All right. And it's only going up there. Ladies and gentlemen, I've got a question for you. If every single one of you were holding 3 Bitcoin, every single one of you were holding 3 Bitcoin, and then a conventional crypto dude comes along and says, yo, bro, man, the dominance is heading to a high right now. It's going to peak out, man. You're going to sell your Bitcoin and go into ADA. You're going to look at the dude and say, shut up, man. What's wrong with you? Michael Saylor's just bought another 22,000 Bitcoin. The ETF balance is going up, man. What are you talking about? The crypto reserve from the US government. They're going to get ready to buy Bitcoin, and I'm going to sell it because of altcoin season. See what I mean? This is the problem we've got, because people are trying to maintain that stance. I'm not saying this to stab at you, my bro. Trying to present an idea or a point that people still think that's going to be the case. I don't think any of you would sell your Bitcoin to go into ADA. Don't even give me Chainlink. Don't say DOT. Don't even say XRP. Profanities in this channel. I thought I said a few bad words, but you all talk about XRP and it's disgusting. Anyway, Bitcoin, what are you doing? Yeah. Yeah, the markets are going to be dumping because they haven't reacted yet. What's the NASDAQ doing? Down my days, NASDAQ. Oh, gap down at the open, man. It's horrible. I mean, it is shorting season in my honest opinion. Volatility in there is on its way. Euro is climbing up. They're going into havens. Yen, where are you? Coming up again. The bonds market stabilizing. They're going to go up. Ultra bonds, they're moving. Listen, guys, I'm going to say this to you as well, okay? When people say buying Bitcoin at these prices is a gift, I agree. It is a gift. If you're buying it or were buying it at 109,000, to compare the logic of value, it's still expensive. It is. I believe Bitcoin is still expensive, but it doesn't mean that at any point in this range, it cannot reverse from it. You've got tariffs. It's a problem. Okay. So please take that into consideration when you are trading or even buying Bitcoin for the future. Sailor says that you should buy Bitcoin and hold it for 4 years. Tariffs doesn't matter for you. But if you're going to focus on the 4-year concept or the cycle, the only thing you need to pay attention to is when the interest rates move up and when they move down. Okay. Principally, it says that this is a time when you want to buy Bitcoin because the interest rates are, in principle, going to come down. So that means money supply is going to be released. It's going to be accessible for money. But we've got a couple of problems with this interest rate story. We've got tariffs that could impact inflation, which could then lead the markets to say, okay, we're not liking this. Maybe the Federal Reserve is still going to keep the interest rates on hold. So once we do get the path where quantitative easing is going to come into play and they say, this month we're going to cut, next month we're going to cut, and this month we're going to cut, cool. What we've got now is, we'd like to cut, but we're not. So we'll wait and see for the next data. This month we're going to wait and see again, just in case we're right with this data. Yeah, we're probably going to cut in the future, but we need to wait just for a little bit more because the data was only one beneficial reading on inflation. But that's no good for us. We need more data. If you're trading the legacy markets, then yeah, that logic of waiting for interest rates to start being cut, that's cool. Then yet you can trade Bitcoin by Bitcoin on the principle of adjustments in interest rates. But you've got other things that are happening. We ain't had tariffs. We didn't have any issues with tariffs with Biden, did we? No, unless he was putting tariffs on the Chinese with regards to the chips being sold. But that's just a stab at China. But to the world, Trump's gunning for the world. And that's why on my thumbnail he's saying he's screwing the world. With that being said, ladies and gentlemen, I hope you've enjoyed today's live stream and you can take something from it. If you are new, be sure to like and subscribe. And I will be tuning into you all later on this evening. Take care of yourselves, gang. Mad love.